Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. The monthly personal consumption expenditures price index report, or PCE report, helps to gauge the strength of the consumer sector of the economy. This also gives a good outlook on the overall economy and market performance. IBD News editor Ed Carson is breaking down what investors need to know about this data. Ed, thanks so much for joining me.
Hey, thank you very much for having me.
Absolutely. Now, what can investors expect to see with this upcoming report?
All right, it's the income and spending report is out there, and there's consumer spending numbers and income, but the biggest highlight will be the inflation aspect of this, and that's the PCE price index, and most specifically the core PCE price index. And why do people care about this? Because it's the Fed's favorite inflation gauge. So what the Fed is thinking about whether or not they want to cut rates or not, it's going to be this kind of report. It's going to be front and center. And we've gotten early the PPI and CPI numbers, and those reports showed some details that suggest that the Fed's inflation gauge will do well and that will be a little bit milder, maybe not be like ice cold inflation. We'll still have it and everything, but it'll be showing some progress. That will, probably positive for the market, probably positive for expectations of rate cut later this year.
This report and consumer spending accounts for two-thirds of the economy. So, right now, where are people more spending their money? Is it on durable goods, non durable goods, services?
It's usually they do spend the most on services. That's always where it is. And durables is where it comes and goes. It's like you have some extra money, maybe I'll buy that TV or this other thing. So the consumer spending number here is the broad measure. This is the one that includes all of that. We already had retail sales data that showed a slowdown in April. So that's going to be more about your goods, durables and non-durables. This is going to add in the services and measure a different way. But we're probably going to see a bit of a slowdown from some strong numbers in that front. Yeah, the consumers have still been spending because the labor markets have still been pretty strong. I mean, it's sort of like though that's sort of what it comes down to it. I mean, maybe there's some signs of slowing, maybe that'll happen, but people have been waiting for the soft landing. And it's amazing how the American consumer just seems to shrug off almost everything and keep on spending.
Are there companies, though, that have really been affected by this recent data?
One of the issues is for retailers and other things is that they're still on the labor side and the cost side that isn't going up. I mean, inflation is hitting these companies too. One reason they're raising prices is because they're facing higher costs. So it has been a little bit more hit and miss. There's definitely some winners in retail. There's certain like some youth apparel chains, certain restaurants, but then other restaurants, other retailers are not doing so well. So it really is. It's not this overwhelming consumer strength that's lifting all boats necessarily because it's they are positioning it in certain ways and it's a little bit hard. Only some retailers are really thriving in this environment of steady inflation.
And where do these consumer spending trends suggest the economy is heading?
The overall trend still suggests that we are slowing down a little bit, that there might have been some special factors earlier in the year, maybe that propped it up, but that it does seem like it's sort of a soft landing. Soft landings are hard. I mean, it's really hard because it's like the Fed is taking a cruise ship and it's like, trying to do things and trying to adjust things, knowing that in 6 months it'll change direction. It's hard to know how that'll happen. But that still seems to be the trend that we are slowing down a little bit, not coming to a hard stop, but something that, hopefully that the Fed and other things can tinker with to keep things going relatively well.
All right, let's go back to the Fed. How do inflation hikes, cuts, possibilities influence the PCE report?
Well, we're going to be looking for the PC price index. I mean, this is like there's some data from one of the interesting things about the PPI and CPI is that there's literally aspects of it that feed right into the PCE inflation gauge. And so there was reasons like you can like, aha, this suggests that the PC price index will be doing this, is suggesting a mild increase in April. So that would be it'd be a positive sign, not something that would get the Fed really excited. I mean, Fed officials are saying we want to see several months of calming inflation again. We had it for a while, then it started picking up again. So really want to see that trend continuing. And that's really what it's just so crucial to the Fed environment is like, see if they see that coming down and the economy is slowing down, but not too rapidly, then then they might be able to ease a little bit without having to be too stingy on the rate cuts or too aggressive on the rate cuts. They really want to make sure they avoid they want to bring down inflation without triggering a recession. And I think people were surprised by that. Maybe even the Fed surprised by it, but they seem to be moving in that way.
And for investors, what do they need to know about the PCE report?
The,
Why should they care?
because the market this like, look, the market has been so driven by by the Fed rate outlook, by treasury yields and all that. I mean, the reason why the market was in a correction in many ways in late 2022 is because treasury yields were soaring and the Fed was still being pretty aggressive. The reason we started rallying is because treasury yields fell, the Fed started shifting toward away from rate hikes to start thinking about rate cuts. And so this is just that fundamental backdrop, along with certain things like AI and stuff, that is really what's driving the market. So we get positive numbers off of this. It's a really good sign for the economy. If it surprises to the upside on inflation, that could really derail things. Because I think markets are starting to feel like, hey, maybe things are getting better again on this front, and so that could be a game changer. That would not be something that markets would like.
All right, Ed. Well, we'll be watching as the report comes out. Thanks so much for watching. This is IBD Explains. Stay right here on IBD for more. I'm Meredith Heyman. We'll see you next time.